Paper 2, the role of digital accounting in public financial management. This paper presentation will take the following outlook. 1. Background issues. 2. Concept of digital accounting. 3. Concept of public financial management. 4. Digital accounting in public financial management. 5. Digitization of government revenue and expenditure. 6. Areas of application of digital accounting. 7. Benefits of digital accounting in PFM. 8. Challenges. 9. Conclusions. Now let's take a look at the background issues. In tune with globalization, both public and corporate organizations make use of information and communication technology to ease operations and improve efficiency. Starting from intranet, where computers are connected using local area network, to internet, where computers at various points all over the globe are connected using or giving rise to the World Wide Web, otherwise known as WWW. In this digital age, technology is no longer a luxury but a necessity, a demand, and it keeps on expanding, moving faster and embracing every aspect of human endeavor. One area that is facing the transition is the public financial management, particularly in emerging and developing economies. It is good to note that technology has cut across every facet of the human life, and one area that is that has caught the attention of technological advancement is the public financial management. Basically, public financial management, PFM, is concerned with aspects of resource mobilization and expenditure management in the public sector. How efficient are finances being managed? In other words, financial management is concerned with raising financial resources and the effective utilization towards achieving the organizational goals. So it has to do with strategy or methodology in harnessing financial resources, as well as making effective use of those resources. That is financial management. There has been a global push in recent years to help developing and emerging economies characterized by low incomes to improve the way they raise, manage, and spend taxpayer money. In multilateral agreements such as the Paris Declaration of 2005, the Accra Agenda for Action 2008, the Nigerian Financial Reform 2010, governments from around the world have reaffirmed their commitment to collaboratively strengthen the public resources management in developing countries. So there has been a kind of synergy among nations in terms of meetings and making resolutions as to how help manage public resources in the most efficient way. As a language of business, accounting plays an important role in both private and public organizations. Thus, digital accounting with a blend to ICT and accounting has a significant role in how public finances are raised, expended, and accounted for. Digital accounting refers to conducting all accounting transactions. That's why we're looking at the concept of digital accounting now. It involves conducting all accounting transactions in electronic environment instead of using papers. Before now, it was in the norm to use papers and biros in actually carrying out accounting transactions in terms of recording and transmission of data to users. But there has been a much transformation due to the application of technology and the digitization of the accounting procedures. It has to do with application of digital accounting softwares in the generation of accounting data and transmission. Digital accounting can be defined as the accountancy specific to the current digital operations found in the economy. That's to do with adoption of digitization, application of technology, application of software. Also, digital accounting refers to the formation, representation, and transmission of financial data in an electronic format. That is the use of computers and accounting softwares. Computers and accounting softwares have transformed the financial industry. Technology advancements have enhanced the accountant's ability to interpret and report data faster, more efficiently, and more effectively than ever before. That is because of the ability of this technological advancement and their adoption in reporting data in a more fast mode, in an efficient manner than it has been before. These softwares have been programmed to be able to accept data and interpret them in accordance to the way they have been programmed. Digital accounting is superior to traditional accounting for so many reasons. One, speed and accuracy. Automatic generation of financial report on real-time basis, maintenance of large database as backup. So whenever information is needed, there is always a backup for that information. So the tendency for data to get lost is minimal or non-existent. Public financial management is a central element of a functioning administration underlying all government activities. It encompasses the mechanisms through which public resources are collected, allocated, spent, and accounted for. As such, PFM processes comprise the whole budget cycle, public procurement, audit practices, and revenue collection. It is good for us to know that this word public entails the allocation of public resources in terms of financial management. Resources that has been allocated for programs and projects are to be managed in an efficient manner. Sound, transparent, and accountable public financial management is a key pillar of governance. Of course, a governance that is not transparent and is not responsible cannot be accountable. And so a sound, transparent, and accountable public financial management is a key pillar of governance reform and of vital importance to providing public services of good quality to citizens. The demands are high, and so citizens demand accountability from officials who have been entrusted with public resources, and as such good quality resources or goods can actually be administered if such systems promote transparency and accountability. A sound financial management system which will assist in the accomplishment of government objective will entail that there should be economy in the collection of government revenue. The implication of this economy means that there should be value for money. There should be value for money. Weighing the cost and benefit in collection of government revenue, there should be value for money, value for efficiency and effectiveness in the collection of government revenue. Now, secondly, money appropriated should be spent according to the demands of competing claimants, which should satisfy public interest. So all public expenditures should be in the public interest, and they should be in accordance to demand. So there shouldn't be flagrant disobedience of the law. Projects should be executed efficiently and economically. There should be economic viability in the implementation of projects. Safeguards should be instituted to ensure that public resources are lawfully used to accomplish public ends. There should be adequate safeguards in place to control the use of these public resources. Safeguards in terms of laws that have been enacted to actually streamline or curtail the manner in which resources are being utilized. Digital accounting in public financial management. So we want to look at the application of digital accounting in the management of public finance. Digital accounting can be seen in key areas of public financial management, which include revenue generation. We're looking at the application now. It is applied in public expenditure, transparency, accountability, and audit. This, however, requires an effective public financial management information system, PFMIS. Now let us look at the definition of PMIS. This is a set of automation solutions that enable governments to plan, execute, and monitor the budget by assisting in the prioritization, execution, and reporting of expenditures, as well as the custodianship and reporting of revenues. Accordingly, PFMIS solutions can contribute to the efficiency and equity of government operations. Of course, we know that the adoption of PMIS is majorly on the government's expenditure and revenue generation, so it is specific to the public sector. A financial management information system can be broadly defined as a set of automation solutions that enable government to plan, execute, and monitor the budget. Digitization of government revenue and expenditure. Digitization involves shifting from paper-based cash and checks to some form of electronic or digital payment. Revenue generation is key to survival of any government, and payments are central to how government transfer, allocate financial resources. The automation of revenue generation process of government helps to improve efficiency and effectiveness of collection as well as block leakages. So the adoption of digitization is meant to ensure that government shift from paper-based accounting, paper-based recording, to electronic-based recording in terms of revenue generation as well as digital payment. In doing so, efficiency and effectiveness will be promoted. The manner in which payments are made has largely been a critical issue to development in public financial management systems. A growing body of data and experience shows that shifting from cash to electronic payments provides more security to recipients, greater efficiency, accuracy, and accountability. It can also save very significant time and human resources that can be then used for more productive purposes, supporting overall economic productivity. This section harnesses or portrays the importance of the adoption of digitization of the accounting processes or system in government practice. In Nigeria, a number of reforms have been put in place to strengthen public financial management. Let us look at some of the reforms. These reforms showcase digital accounting role in public financial management. These reforms include Government Integrated and Financial Information and Financial Management Information System, GIFMIS, Treasury Single Account, as we all know, TSA, the Integrated Payroll and Personal Information System, IPPIS. Areas of application of digital accounting: the Integrated Financial Management Information System. It is a system in which FMIS and other public financial management information system, just like the HROMIS, which represent the Human Resource Management Information System, a payroll procurement, share the same central database to record and report all daily financial transactions, offering reliable consolidated results for decision support, performance monitoring, and web publishing. In Nigeria, we have the GIFMIS, which is the GIFMIS. GIFMIS is aimed at improving the acquisition, allocation, utilization, and conservation of public financial resources using automated and integrated effective efficient and economic information systems. Of course, as said earlier on, the GIFMIS represent the government integrated financial management information system. So it is meant to integrate all forms of data that are related to the government in order to improve acquisition, allocation, utilization and conservation of public financial resources using automated, integrated, effective, efficient and economic information system. The overall objective is to implement a computerized financial management information system for the federal government of Nigeria, which is efficient, effective and user friendly. So it all boils around the use of the computer, the use of a system that integrates financial transactions, that integrates information, linking information between ministries, departments and agencies in order to foster accountability and transparency in the conduct of government business, to increase efficiency and effectiveness in all government businesses. The GIFMIS was introduced to support the government in all aspects of budget preparation, execution and management of government financial resources. GIFMIS is expected to 1. Increase the ability of federal government of Nigeria to undertake central control and monitoring expenditure and receipts in the MDAs. Increase the ability to access information on financial and operational performance. To improve medium-term planning through medium-term expenditure framework (MTEF), provide the ability to understand the cost of groups of activities and tasks. To increase the ability to demonstrate accountability and transparency to the public and cooperating partners. Increase internal controls to prevent and detect potential and actual fraud. Increase the ability to access information on government's cash position and economic performance. GIFMIS coverage. The financial management functions of the GIFMIS will cover the entire financial management cycle, including, now let's look at the coverage: budget preparation, 2. Budget maintenance and management, 3. Budget execution and treasury management, 4. General ledger, 5. Procurement, including commitments of purchase orders, maintenance of a central supplier register, and support for procurement. So these are the coverage of GIFMIS, including the following: receipting, accounts receivable and revenue management, payments and accounts payable, which happens to be the creditors, short-term creditors, inventory and stock control, asset management, budget execution reporting, financial reporting, project accounting, loans and advances. GIFMIS interfaces. I want to take a look at some of the interfaces of GIFMIS or collaborations. Interfaces with third-party systems to be provided by the GIFMIS include Human Manager, the Payroll, Office of the Accountant General of the Federation, Payroll Cost, Loan Repayment, ASICUDA, Customs, the Nigerian Customs Service Revenue, Automated System for Customs Data. So it's more of a computerized systems designed by the United Nations Conference on Trade and Development to administer a country's custom. So all activities or transactions relating to the customs office are being carried out using this particular software. SAP represents systems, applications and product. Taxation, FRS, revenue. So these are some softwares that are being adopted or used in order to facilitate the digital accounting system of the federal government. CD, DRMs, debt management, DMO, debt payment, debt recording and management systems is an integrated tool for recording, analyzing and reporting public sector debt. We are just trying to talk about some of the softwares that are being adopted, or computer-based application system in order to facilitate the accounting processes of government. Another software is the Oracle ERP, Banking Interface, CBN Bank Statements. Oracle Enterprise Resource Planning is a software application suite introduced by Oracle Corporation. Oracle ERP manages enterprise functions including accounting, financial management, project management, and procurement. Oracle 9i is another software package, medium-term budgets related to medium-term budgets, budget office, annual budgets, and ceilings. Accounting Transaction Recording and Reporting System, ATRRS. This is an ICT-based accounting software application which facilitates the input of accounting transactions, its reconciliations, and the generation of standard accounting reports that meet required standards of the Treasury. At the point of its conception, it was emphasized that the full deployment and development of the GIFMIS will not be possible within a short time, hence the need to have a bridge which will link up with the ultimate objectives of the GIFMIS. This will thus be a stopgap solution to GIFMIS. So this is another accounting software that has been deployed in order to make work much easier in terms of data generation and dissemination of information to the users of such information. Presently, due to the need to incorporate the multidimensional chart of accounts of GIFMIS, an upgrade was again made to ATRRS LAN version 3.1, which is presently being rolled over to the ministries, departments, and agencies. This new version is expected to ensure seamless capturing of accounting transactions, thus facilitating ease of reconciliation of the account, leading to timely production and submission of reports from line ministries, departments and agencies, and federal pay offices which are being located in every state of the Federation, for the Office of the Accountant General of the Federation, for consolidation and production of annual consolidated financial statement of the federal government. Familiarize the workforce with the use of IT equipment at an early stage of government integrated financial management information system implementation, which would enable a smoother transition to this GIFMIS software. Potentially reduce training period and requirement for GIFMIS. Potentially reduce GIFMIS implementation cost. Shorten business process reengineering period, that is, it is faster to transit from a semi-automated process than a manual process. Facilitates ease of reconciliation of the various bank accounts. Ensures clean and accurate data will be available for migration into GIFMIS. These are many more advantages of the adoption of this software. At the state level, SPAC, which represents State Partnership for Accountability, Responsiveness and Capability, was developed as a template to aid preparation of financial statements. The SPAC General Purpose Financial Statement template is meant to aid states using the NCOA wishing to produce its GPFS. The NCOA represents the National Change of Address. The template allows the automatic and speedy creation of states' four main statements of the GPFS, that's the General Purpose Financial Statement on IPSAS, the International Public Sector Accounting Standard cash basis, including the cash flow statement, a statement of assets and liabilities, statement of consolidated revenue fund, and a statement of capital development fund, which are presented in a report referred to as the final accounts or the Accountant General's report. The template has been developed in Microsoft Excel in line with the FAAC IPSAS subcommittee prescription and is predicated on the basis that the state government is able to generate a trial balance at the end of the financial period, for which the financial statements are meant. In addition to producing the four main financial statements, The Spark template produces reconciliations which are necessary to ensure the integrity of the account. The Spark is more of a template in one of the softwares, Microsoft Excel, which is being programmed in a manner to suit a particular purpose. The IPPS, Integrated Payroll and Personal Information System. In a bid to reduce corruption, particularly through ghost workers, the Nigerian government in October 2006 conceived the Integrated Payroll and Personal Information System to provide a reliable and efficient database for the public service. IPPS was designed to achieve the following objectives. 1. To facilitate human resources planning by providing information for decision making. Provide a platform for accurate budgeting and annual recurrent expenditure on staff emolument. Monitor monthly payment of staff emolument against the federal government of Nigeria annual budget to ensure minimal wastage and leakage. Eliminate payroll fraud such as multiple payment of emolument to single employee or payment of monthly salary to a non-existent employee, that is ghost workers. To facilitate easy storage, updating and retrieval of personnel records. Ensure database integrity so that once entered cannot be manipulated by unauthorized users. The implication is that those who are actually going to handle this IPPS are people who are duly authorized to do so, and so no third-party interference will be, encouraged or allowed. To enhance confidence in the process of determining staff emolument cost, meaning that data integrity will actually be ensured. Prompt deduction and remittance to accounts of all third parties payments such as pension fund administrators, National Health Insurance Scheme, Pay As You Earn, etc. Now, there was a discovery due to the implementation of this policy. It was discovered that in the first month of implementation, IPPS saved the government 416 million naira. At the end of its first phase implementation in 2010, the savings rose to 12 billion naira. This important digital accounting scheme covers over 300 MDAs in Nigeria and is yielding positive results in the areas of reduction of payroll fraud, improved accountability and transparency. Treasury Single Account. Treasury Single Account was introduced by the federal government of Nigeria in 2012, being a financial policy in use in several countries around the world to consolidate all inflows from all agencies of government into a single account. The introduction of the Treasury Single Account policy, therefore, was vital in reducing the proliferation of bank accounts operated by ministries, departments, and agencies towards promoting financial accountability among governmental organs. So, this TSA, or the implementation of TSA, has to do with the integration of all account numbers being operated by ministries, departments, and agencies. No longer will ministries be operating different accounts any longer. Now all inflows has to come to a single account. The cardinal objective of TSA is to facilitate implementation of the federal government of Nigeria cash management policy. The other objective of TSA is to facilitate the implementation of an effective cash flow policy with a view to 1. Ensuring that sufficient cash is available as and when needed to meet payment commitments. Controlling the aggregate of cash flows within fiscal, monetary, and legal limits. Improving the management of government's domestic borrowing program. Enhancing operating efficiency through the provision of high-quality services at minimal cost. Investing of excess or idle cash. Ensuring greater accountability in public expenditure. The adoption of TSA in Nigeria has reduced government borrowing, and therefore the cost of debt servicing has reduced drastically to perhaps below half of the previous level. Consequently, it has certainly uncovered loss of government funds unaccounted for in times past. One striking issue before TSA adoption was that most banks in Nigeria intentionally held back the remittance of revenue collected by them, only to trade with the money at the expense of the government. Certain MDAs in Nigeria traded with government revenue for their personal gains, resulting in poor execution of budget and timely payments to beneficiaries such as pensioners. So the introduction of TSA has, in no small way helped in, ensuring that there is integrity in the financial process. For best practices, payment process should be automated using electronic payment system, having payments made directly to the bank accounts of beneficiaries or contractors as the case may be. Through the adoption of the Treasury Single Account, beneficiaries can actually receive their pay as at when due, and the issue of delay in payments will actually would have been the thing of the past. Computer assisted audit tools and techniques. CATs. Computer assisted audit techniques refers to the use of technology to help you evaluate controls by extracting and examining relevant data. Singleton in 2003 defined it as computer tools and techniques that an auditor, external and internal, uses as part of their audit procedures to process data of audit significance contained in an entity's information system. So the use of CATs is more of a software used by auditors to actually carry out evaluation in an entity through extracting of relevant data. The use of computer tools, of course, computer is being applied in the implementation of this system. The most common form of CATs used in the audit profession is generalized audit software, which allows auditors to examine 100% of the data in transactions, not just a sample. It is used to detect material misstatement in a financial statement. Example of GAS are audit command language, interactive data extraction and analysis, IDEA, Monarch Professional, Pan Audit Plus. Roles of digital accounting in public financial management. The roles are improved accountability, transparency. They should be seen as unbiased. They should be seen as people who or personalities that carries out their activities in a professional manner. Timeliness of reporting, uniformity in reports presentation, compatibility and comparability of reports, automation of processes, increased visibility. Facilitate budget management, reduce cases of payroll fraud, facilitate audit services, facilitate revenue and expenditure tracking, reduction of corruption, facilitate human resource planning. Now, the challenges of digital accounting in public financial management. Now, applying digital accounting in public financial management is not without challenges. Notably, among the challenges are the following: inadequate interagency collaboration, especially between the Treasury and Budget Office, on use of Accra-based budget template. For the application of digital accounting to actually be achievable, there has to be cordial relationship, interagency collaboration, synergy among agencies, so as to facilitate quick implementation. The second one is non-compliance with National Treasury circulars by some MDAs. When there are no compliance by some of the MDAs, it will actually forestall the implementation of the system. Any mistakes during the installation of the system render the system inefficient. So it has to be accurate, it has to be correct, it has to follow due process, it has to ensure that all forms of errors are taken care of, so that when the system is being implemented, there will be nil error in terms of result generation. Funding requirement for investment in technology and capacity building is enormous. Building softwares, requires a huge financial implication. So there has to be serious commitment in terms of investment in technology, resistance to change. When people are not, given to change, when those who are supposed to, actually implement the system or, appreciate the introduction of such systems are not actually, doing that, there is a tendency that, implementation will be, forestalled. Staff capacity is still low. Long history of operation using manual system. Short transition period. Banks at times delay conclusion of e-payments to various beneficiaries. So these are some of the challenges that actually inhibit the implementation of the electronic accounting system or the digital accounting system. In conclusion, the place of digital accounting in PFM or public financial management is enormous. And imagine, in Nigeria, the role of digital accounting in PFM is clearly seen in the various public sector financial management reforms ranging from GIFMIS to TSA. Effective and efficient application of digital accounting in PFM results in improved transparency and accountability, facilitate budget planning and implementation, reduction in payroll fraud and leakages. Most importantly, it facilitates establishment of large financial database where financial data can be stored, retrieved, and processed to aid decision making by the government. In spite of the benefits of applying digital accounting in PFM, there are challenges. These include capacity building challenges, human efforts at resisting change, and cases of poor collaboration among agencies. Thank you for listening.